You know, in a market that's just full of noise, there's one trend that's becoming absolutely impossible to ignore. Today, we are going to dig into the data to uncover a really powerful defensive growth strategy for 2026. And, it might just be hiding right where most investors aren't even looking.
This right here, this single idea is really the foundation of everything we're talking about today. On one hand, you've got the wild ups and downs of tech, and on the other, you have one of the most powerful, most undeniable demographic trends in history. Let's dig into why the smart money is paying such close attention to this.
So how do you position your portfolio in a market this unpredictable? Well, the answer isn't some crystal ball. It's about spotting the trends that are already baked in, and honestly, it's about following where the big institutional money is already headed.
Okay, let's dive in. Here's the roadmap for today. First, we'll find that one megatrend that cuts right through all the market noise. Then we'll follow the money as it moves. We'll look at the big difference between gambles and infrastructure in healthcare. We'll figure out how to spot real value, face the hidden risks head-on, and then we'll wrap it all up into a clear, defensive play for 2026.
All right, first up, to really find the opportunity here, we have to start with the one demographic megatrend that, frankly, no investor can afford to ignore anymore.
So think about it. Stock prices, interest rates, economic policy, all of that changes day to day. But there is one trend that is not just predictable, it's inevitable. And that's that people are living longer than ever. I mean, it's no longer some rare exception for people to live well into their 90s, and that has huge, huge implications for the economy.
You know, for governments and for big insurance companies, this is actually a problem. They call it longevity risk. It's the scary idea of having to pay out benefits for decades longer than they ever planned for. But for an investor who knows where to look, this risk is actually a massive opportunity, because longer lives mean higher lifetime healthcare spending, and that creates a steady, growing demand for all kinds of services.
Okay, so if this huge demographic wave is coming, how are the big players getting ready for it? Well, they're using a classic market playbook. It's called a sector rotation. This slide basically lays out a pattern we see over and over again in market history. When the big institutions start to get nervous about a recession, they start to de-risk. They pull money out of those flashy, high-growth sectors like tech, the stuff people buy when they're feeling flush, and they move it into what they call safe haven sectors. Why? Because people still get sick, they still need to turn on the lights, and they still have to buy groceries, no matter what the economy's doing.
And look, this isn't just some theory from a textbook. The source material confirms this is a real, measurable shift that's happening right now. Analysts are literally watching money flow out of risky assets and into these defensive zones, with healthcare being a top destination. This is the footprint left by billions of dollars moving towards safety.
Okay, so we follow the money into healthcare. Simple enough, right? But this is where it gets a little more nuanced. Just saying invest in healthcare is way too broad. See, inside this one sector, there are two totally different ways to invest, and understanding that difference is absolutely crucial.
On the left, you've got the speculative biotech world. This is like betting on a moonshot. A pure gamble that one company's single drug will somehow make it through years of trials and get that FDA approval. Then on the right, you have the picks and shovels approach. It's like during a gold rush. Instead of betting on one miner to strike it rich, you sell all the miners the tools they need. This is the healthcare infrastructure. The companies that own the hospitals and the nursing facilities, or the giants that provide all the essential equipment.
This quote really captures that binary risk perfectly. A single press release from a regulator can make a stock jump 50% or drop 80% overnight. It's a really high-stakes game, and it's often completely unpredictable.
And that brings us to the alternative. Instead of making that all-or-nothing bet, you can invest in the launchpad itself. You invest in the foundational companies that profit from the overall growth in healthcare demand, no matter which new drug actually succeeds or fails. You're shifting from pure speculation to investing in infrastructure.
So how do we actually find these solid foundational companies? Well, it all starts with a core investing principle. You have to understand the difference between price and value. It's a super common mistake to think price and value are the same thing. They're not. Think of it this way. Price is just the sticker on the car. But value is the engine, the performance, the reliability. It's what you're actually getting for your money. Smart investors look right past the daily price swings, and they analyze the underlying value, which is driven by predictable things like demographics and cash flow. Okay, now check out this brilliant example from our source material. You've got two companies. They both have the same PE ratio. They're both projected to grow at the same rate.
On the surface, they look identical, but Company A is a cash machine. It can grow while also paying out all of its earnings to you, the shareholder, as a dividend. Company B needs every single penny it makes just to keep growing. So which one is more valuable? It's Company A by a long shot. It gives you both growth and a return of capital. That's real value.
Now, let's be really clear here. No investment strategy is completely risk-free. And if we're going to build a credible thesis, we have to look at the potential downsides with our eyes wide open and really understand what could go wrong.
So the most important thing to remember is that even with a trend this powerful, there are always external forces that can come in and change everything. These are the headwinds every investor absolutely has to respect.
This slide breaks down the major risks. Regulatory risk? That's the biggest monster under the bed. A single change in how Medicare prices a procedure can completely blow up a company's business model. Then you've got political risk, pricing pressure from huge insurance companies, and finally, what the source material calls the turkey on the farm risk. It's that sudden, unexpected disaster that seems totally impossible, right up until the moment it happens.
This quote captures that political risk just perfectly. It's about a real-world example where the mere rumor of a certain person being appointed to a key government health role caused a huge sell-off in the sector. Nothing had actually happened. No policy was changed, no law was passed. Just the fear of what might happen was enough to move the entire market. That's how sensitive this sector is to political winds. Okay, let's pull all of these threads together now. We've seen the demographic trend, the sector rotation, the difference between a gamble and solid infrastructure, and we've faced the risks. Now, let's define the core defensive play for the market ahead.
This is the anchor statistic for the entire strategy. The fact that the population of people over 80 is set to more than double isn't a forecast, it's a demographic certainty. And that explosive growth is going to create a powerful, non-negotiable, long-term wave of demand for healthcare facilities and services. So this brings us right to the core takeaway. The strategy is to pivot to something called defensive growth. What does that mean? It means shifting away from those high-risk speculative bets and instead focusing on the stable, essential infrastructure, the picks and shovels, that will directly benefit from this massive, predictable, long-term trend. You're investing in the companies that provide the beds, the buildings, and the basic services that this growing population will absolutely need.
And so I want to leave you with this one final question to think about. When you look at your own strategy, are you betting on what might happen? A possible tech breakthrough, a lucky market turn? Or are you positioning yourself to benefit from what must happen? The undeniable realities of our demographic future. The choice between possibilities and inevitabilities. Well, that could define your success for years to come.